Good morning, everyone. Today is November 1st. This is Brad Matheny, and a member just asked about my TT Scanner software. So, what I wanted to do was highlight some things, particularly, there's been a lot of interest now in the live TT Scanner Hotlists. The live TT Scanner Hotlists run on my server, update every 60 seconds. They are based on 2 minute, 5 minute, and 15-minute triggers. They're a great way for traders to come in here and watch sector rotation. You can see so far this morning, getting a bit of a relief rally. We've got some moderate upward trending. QLD is up 0.62%. XBI is up 0.51. SOXL is up 2.17. Really great setups here when you take a look at it. That's on a 15-minute, 5-minute here. Newer triggers. XBI is up 0.94, and SOXL 0.92. Again, 5-minute triggers only last maybe 20, 30, 50 minutes, maybe a little longer. So what you're looking for here are, particularly in this list, is you're going to be watching the bull bear shift. And this is going to happen every new bar. If it stays the same for 2 or 3 bars, then it won't show any change. But this is the last move, the last shift. And this is part of the bull bear ranking. So I guess the smartest way for me to do this is to come back over here and to show you the weekly hot list. So I can go back and forth. So here's the TTScanner Hotlist. This comes right off my server running eSignal. This is the weekly hot list. This has all the data. Here's your bull bear ranking right down this column. Here is your bull bear shift weekly coming down this next column. So this tells you momentum up or down, ranked from generally a 0 to an 8 or 9 level. I have seen 9s, are very rare. That's very strong trending. You can't, and then bull bear shift is how much it has changed. So this 5 was a 4 and went up by 1. This 5 was a 4, went up by 1. This 4 was a 6, it went down by 2. This 3 was a 6, it went down by 3. So you can see with the bull bear shift that, how price is reacting to trending week over week. A -4, a -3 is a pretty big downward trend. A -6 is a huge downward trend. And generally, -5, -7, -8, these are big numbers. These are really big numbers. This was a 5, and it went down by 8 last week. XBI, biotech, very weak last week. No new triggers in a warning trend, but just generally very weak last week. Okay, so the trending system tells us generally which way the markets are moving, and the trade trigger is the TT scanner generating long or short triggers. Now, TT scanner is a great little system. I mean, it has its fault. No system is 100%, and nothing is ever going to be able to, nail market moves 100%. Now, I'm sure there are systems that can get in the 90s, 96, 95% range, but these are typically tiny little scalping systems. Even the best systems I've ever seen, consistency-wise, have been in the 70 to 80% range. If you get up in the 90s, you're really looking at possibly a forward-looking system or a real short-term scalping system. Nothing is ever going to be like, in my opinion, 97, 98% accurate. It's ungodly that you do that. And if you do find something that's like that, it's probably going to have, an unlimited risk capacity, meaning if you buy and hold something for a 10-cent profit and have unlimited risk, yeah, eventually you might get to 97% profit, meaning profit ratio. But again, how much are you willing to risk on something like that? So what we're looking at again is these are the number of bars that it's been in a trade. So this is weekly. So this is 48 weeks, 5 weeks, 5 weeks, 2 weeks, 4 weeks, 3 weeks, 5 weeks. you get the idea. Here's the entry price. Here's the in-trade profit, how much we have based on the last known price. And here we have the target number 1 and target number 2. Now, when we're long, and it picks the targets on its own. So you can see we got in at 74.51 over here. Our target is 77.93 and 81.24. It has hit both the targets already, and it has come back down to 79.93. That's actually the stop. Sorry, we're up at 80.38 right now. So the stop is above our entry. We were entered at 74.51. Target was 77.93 and 81.24. Our stop is now right at that first entry level or first target level. So at that point, ladies and gentlemen, you need to understand, by the time you hit the second target, you're locked in. It's profitable all the way. Okay, you can't really lose money when you get to that trade. Now you see here that when you hit target number 1, it moves the stop to entry plus a small percentage. So at that point, entry number 1, no matter what happens, you are protected. As soon as you hit target number 1, the trade is guaranteed to be profitable. That's the way it works. So the more you see these target levels, the more likely you are to see very solid profit. Okay, so now you can see here, as we're moving, this trade is up 6.81%, 55.07. Remember, this is not live. It was at 22.87 as of last week, and our stop was at 48.35. Now, thrust, which might be a little hard for you guys to see here, thrust is a process of, see if I can drag this over. Thrust is a custom measurement indicating short-term price trending. So a positive number indicates upward thrust. A negative number here or here indicates downward thrust. And kind of like my pressure indicator, thrust is a measurement generally of momentum. And what I'm trying to do is color code thrust based on how it's moved. So a red positive thrust indicates that it had pulled downward from a higher number. A green positive thrust indicates that we've moved higher in a bullish trend. A purple thrust means that we're nearing kind of a flatline movement. And then we have the pink line, which is indicating that we're indicating a slight downward movement. So this is, again, kind of flatline. Pink and purple are kind of flatline, meaning we're not getting a lot of real thrust. So you can see here, minus 79 is fairly strongly bearish. Okay, we've been in this trade for 12 weeks. We've hit both the targets. We're at 81.06. Target is 80, or stop is 80.32. We've got 3.47% profit in the trade. But generally, we're getting, solid weakness in the trade right now. And you can see this moved up as a 0. We have no trending in the trade, really. And it moved up by 1. So it was a -1, and now it's moved up. So generally, we're getting flat weakness in this trade. That's how you can look at this. And the way I do that is I look at the ranking. So here, 2, -2 means that it was a 4 and went down to 2 because, in order to get to this number, -2, this would have been a 4. It is still in bullish trending. It's off 2%. It's -10 in a pink color, meaning that it's fairly flat and moderate downward trending. Very moderate, not very strong. A -50 or a -70 or a -100 would be even stronger, but -2.80 red means that we're in a downward trend. You can see that we've been -4 on the shift, means it lost a lot of momentum last week from a 7 down to a 3. Still in bullish trending, very close to our entry price, has not hit our targets. So again, you come over here to the last column, the last 2 columns, and you have profit factor and win rate. So again, profit factor and win rate give you the idea of how it performs. So ideally, you don't want to be looking. Let me find something that would. So this 2.41 and 4.43 right here. It looks like XLF. Let me drag it over here and see what that is. 2.41 and 43 is KBE. So this KBE symbol produces a very good profit factor and win rate. When you have something that's producing a 2.41 profit factor and a 4.43 win rate, that means that, it's performing very, very well. You're getting a win rate of essentially 4-1 winners versus losers, a little over, almost 5-1 winners versus losers, and a profit factor of 2.41, indicating that, you're getting about $2.40 roughly, or I would call it on a profit factor. It's not a direct dollar amount. But what you can do in this scenario is you can look at profit factor and say that, you're getting a pretty good $2.20 range. Now, what I would recommend is that you look at some of these trade. Now, this is, of course, through the lifetime of the data, which I think I have this set to 1,500 bars, I believe. 1,500 bars right now. And what we're looking at here, again, is you want to look at data that is, performing fairly well. So what we would be looking for, anything with a win rate below like 1.2, 1.25, like here, 1.14 and 58. This to me is untradeable. Okay, and this is XT. It is untradeable simply because the win rate is almost 1-to-1 and the profit factor is 0.58. So again, I could take a trade on it, but because it's so low compared to some of these other numbers, I'm not really interested in going big on this particular symbol. And again, if I take a look over here, nothing else really stands out. This list is pretty solid. Here we have, down here near this bottom, we have this 7.25 or 8.25 and 3.1. This looks like it's in healthcare, XLV. These are great numbers. 8.25, that means you've got pretty much, 8 winners out of 10 with an average of $3.20 profit. Here you have it's not 8 out of 10. I'm sorry. That's, your winners are pretty much 8-to-1. That's what this is telling you. And again, here, 4-to-1 winner rate. I think this is the one we went through earlier. Here's 3-to-1 win rate with an average profit of roughly 130, 140. And again, that's the way you want to look at this. So you want to come in here, and when you get down into a 1.5 or 1.4, or as I mentioned, there's my other server kicking in. It always does that. That's a timeout on my other server. But let me come back over here and show you the other list. This is the core list. And you can see again, ranking. So again, you get a new trigger. Here's a new trigger. Here's how I look at it, guys. So you get a new trigger. You come out here, you figure out its ranking. You figure out its sector, metals and mining. Okay, it's down by 2. Okay, it's pulling back a little bit, but still had a new trigger. Okay, fine. We're off 4.61% from the original entry price. Our stop is at 65. This is a long 67. It reports here at 64.01. We're actually below our stop, which would have generated potentially a stop exit. We are in moderate upward thrusting. We've got a 0.97 profit factor and a 2.42 entry. So because we're below our stop already on this trade, remember, this is on Friday. It generates the trades every Friday. I generate this list. What we're looking for is, this is a pretty solid pullback in a moderate downtrend with upward momentum. Could I take the trade? Yeah. I would just have to readjust my stop down a little bit. The thrusting is telling us we're flatlining in a bullish trend. The momentum is telling us we're still moderately bullish, pulling back a little bit. We've got a brand new trigger. Technically, it would get stopped out, but we are below the stop right now. So if I were to get into a trade on Monday morning on this, looking to see if I get a recovery mode on this XME trade, and we can take a look at this to see how it's doing. In fact, I'll come back over here and drag this over. This is my, let's come back here, XME, and we will go to weekly. And this gives you an idea. So we had that big move, 64.37. In an uptrend, you can see pulling back last week. This is the current week's data. So we had 64, 63. And what you would do is you would come over here, and what I expect you to do, let's take a look at that XME trade right here. Stop 64.01, stop level is 65.67. Decent profit factor and win rate. Very solid pullback. I do like to sometimes look at these because when you get a big pullback like this, it's just a recovery. It's just a reversion type of move. So the trigger was actually back over here and it rolled back down, right? Okay, no problem. So we have to decide, do we want to take this trade? Do we want to potentially see where our risk is? So what we would do is we would look and use our best judgment. And again, the way I teach you how to do it, you should be following along here. Simple Fibonacci retracement off of rejection points shows us that key support is here at the 382, at the 50, and at the 618 level. We have upward trending. You can see here coming across this level. I'll just mark it off of this low. We didn't know, but at this low. And I will mark this level up here. So we are theoretically, as of the end of last week, very close to the lower channel. We had broken out of this rejection area here. Very solid sign for potential upward movement. And as a swing trade, given the fact that we are below the stop level, I would consider potentially moving into this trade with maybe 20 to 25% of my normal allocation, meaning I would trade a very small amount and I would likely have my stop right here, setting this up as my primary stop, realizing that I have giving it a little extra room. I'm giving it a 2.5% move, potentially to the upside, giving me room to see if this trade holds up. And again, because I'm only trading 20 to 25% of my allocation, understand that that breaks down to about a 0.6 or a 0.55 if I do the math right. Actually less, 0.4 to 0.55% total risk on the trade. I am risking literally a 0.5%. Because I've cut my allocation down. So the way that works is it's very simple. If your allocation level is, say, 10,000 per trade, just picking a number, I'll just do 1,000, make it easier. So, and I only trade 20 to 25% equals, call it $200. So if I'm risking 2.5% of $200, then I'm risking, basically doing the math in my head, about 50 bucks, 10%, 20, 2.5, yeah, about 50 bucks. And do the math over here. I hate being on the spot. 2.5, sorry, clear. 200 times 0.025, $5. So the idea is now that's the calculation of the risk that I'm having in the trade related to the actual movement of the price. So I'm going to put roughly 200 bucks in, and I'm going to have a 2.5% risk. So total risk I have on the trade is $5. Now, granted, 200 bucks is only going to get me 3 shares, maybe 4 if I up it to 250. So if I go up here to 250, it's going to get me maybe 4 shares. But the idea here is, like I said, you can scale into this as you want. And again, risk of 2.5% at 250 should put me at about 6.5, I think. And again, so you understand that you're risking a very small amount, and you're really trying to ride this out, you know, given the fact that you have this trade setup. Now, I've just focused on this one new trigger here off the core list. Here's triggers over here that are still holding up above the stop level, you know, or slightly below. And the whole idea is that this gives you the opportunity. So when you get into moves where you still have the stronger setups, 2.9, 1.35, you're going to see these play out generally very well. 2.9, 1.30, 6.5, 2.0, 4.0, 1.8, solid thrusting, 2 weeks in the trade, already got 4.9% profit, pulling back a little bit last week, and that's ARKW. So ARKW, come over here, ARKW, here you go. Nice solid uptrend. Looks like I've been drawing on it before. Nice solid weekly uptrend. Really just pulling back because of the election. Now, you do also want to pay attention to what I'm telling you with regards to the election and the SPY cycle patterns. For example, what we get right here. You know, you don't want to be going aggressive when I'm telling you to curve your trading. But generally, watch the bull bear thrust. In fact, I did this a while back. Let me find it. No, we come here. We come here. We come into Trade Tank. We come into live trades. Nope. We come into live trades. We come into images. And I think it was here, or yeah, here's TTScanner rolling. So what this is, this goes back from 628 to 928. I don't want it in here. Close, discard, and open with photos. Okay, so now what I'm going to do here, guys, is I'm going to show you rolling forward how this works. So we're going to go ahead and leave this basically right here. And this is the TTScanner Hotlist. Let me make this a little smaller so you can see the top. This is the main Hotlist. And what I want you to do is pay attention to how this rolls. So watch the scanner, watch the bull bear shift pattern, the ranking system, the shifting pattern, the thrusting system, how the trades move in and out of profits, and of course the profit factor will move as we get in and out of trades. So on 628, we're getting pretty good bullish trending. Generally, most of the symbols are all positive, getting pretty good bullish trending. About half are warning or bearish. The other half are bullish. We're getting lots of green, moderate reds here, meaning some pullback in the market, but generally pretty green. A couple of dark greens here. That's a big shift up on KBE, and a darker green here on IYF. These are big Big moves. So big, darker colors mean bigger moves. That means the markets are making a shift. Trending direction. Sectors are moving higher or lower. So again, we'll look here. Green, 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 green. Looks pretty good. You know, a couple of reds, but moderate blues and green. By the way, blues are flatlining down typically. So now we move to the next one. Okay, look, the greens are still there. This is 1 week later. Okay, we were at 628 on this one, and we're at 7.5 on this one. Notice what happens here. Got a lot of green. We've moved into bullish, more bullish trending. Couple of new triggers, one new trigger. We've moved into twos. Look at all these twos. Everything went down. What happened? Everything went from 6, 5, 4, 3. 1 week later, we're down to twos. The market's contracted, 7.5. This is what happens. We're seeing contraction in the market. We're still seeing bullish trending, but the market's contracted. Got a couple of new flat triggers. I'm sure the thrusting patterns are still pretty bullish, indicating that price is attempting to move a bit higher, but you can see how we've shifted. The upper sectors have shifted downward, and the lower sectors down here have started to make a move. So we're kind of seeing a shift in trending. SDS has started to move higher. QID has started to move higher. KBE has started to move higher. ITA has started to move higher. What we'd be looking for over here is moving into positive thrusting pattern and potentially moving into bullish directional trending. We don't have that yet, except for a couple down here. So now we go to the next week. Boom. What happened here? Look at these shifting patterns. Big, strong rally. See these shifting? These dark green, dark green, dark green, dark green, dark green. These are big shifts. Big market trends. And remember, you want to follow my research, follow my data so you know what's actually going on in here. The markets move up and down. So when we come back over here and look at, this is my main chart. Let's just look at SSO. I don't think I have a lot of drawings on SSO. All right, so let's get rid of all of these. And remember, we're talking about right here. So we're 628 into 7, June, okay, July. So the first week we started right here. That was the week June 24th. And then so on the Friday ending that week, we had this pattern here indicating the downward trending. That was that downward trending week. Now this is Friday. Remember, these update every Monday at the beginning of the new week. So now we have 7/12. This is the week where we start to get some real movement right here. 7/12. That's that week. Okay, what are we looking at? We're getting good, solid upward movement, good, solid thrusting patterns. This is where you can take some of these trades, these newer trades, with good, solid consistency because we're getting this upward shifting. We're getting this consistency within thrusting, within shifting, within trending, the good, solid consistency. Again, following week. Now we start to get these what are called pop shift patterns. Pop shift patterns indicate that we might have a 2 to 3 week real rally setting up, along with these dark green and dark red, or what are called pop shift triggers. Sorry, this is the pop shift. This is the 33 thrust, and this is the pop shift. 33 thrust is basically a thrusting pattern rally. Pop shift means we've seen a big shift in trending, and we may see some real solid upward follow through. So you're getting a lot of momentum triggers here. New. Remember, we are right now at the end of the week on the 20th. So we are right here, end of the week on the 20th. That's July 8th, 15th. Well, this isn't going to work because this is the ultra. Let me come back over here, make sure we're looking at the right stuff. July 20th, yeah. So the SSO is probably not going to be presenting very well. So now let me just go back over the data and show you how we shift. So now into July 20th, we go to July 27th, we get flat, 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 flat. A lot of symbols ended up going flat. We go back into red trending. You see here, things are getting a little weaker, but we're getting out of position trades, right? Then we come into the next week, starting to get a lot more bullish or bearish. Very little bullish. Lot of downward shifting. Lot of pop shift triggers and 33 thrust triggers to the downside. This is a market that is now rolled downward. Okay, it is not a great time to be trying to aggressively buy into long triggers. Now, the long triggers that we do have, you could consider a 30 or 40% entry. You could consider a rolling trend type of anchor position to get into, looking at IXJ, IBB, XLP with these new triggers or newer triggers, like anything here with 2 weeks old, 2 weeks old, anything that is newer, you could try to look at and see if you can buy into anchor positions near the lows, but we're getting generally weaker trending. That's what this is showing us with all this red and this purple and this heavy red here. Now we go to the next week, still pretty much unchanged with regards to the bullish count versus the bearish and warning count. A lot more greens over here. Okay, we're starting to see the market shift back into bullish trending. We're starting to see a bit more green over here. Now take a look at this previous week. Heavy red, heavy red, heavy red to current week. Lots of green, lots of new triggers coming in, lots of longs, shifting sectors back up into 7s, 6, 5s, 4s. And that's a good number. So understand that when we go through the weakening trend, you'll see 2s and 3s, maybe 4s, maybe 1s. As we start to build strength, you'll start to see 7s, 8s, 9s. As we start to build strength, you'll see 6s, 7s. So when we get into 6s and 7s, lots of them, you're getting pretty good strength. When we don't get a lot of 6s and 7s, we start to get 4s and 3s, you're getting into moderate strength, not very strong. So here we have 6, 5, 4. Again, lots of red, weakening but still bullish. Look at what's really strong here. Lots of 6s on the downside. Come back over to the next week. Oh, look, we're getting lots of 7s, 6s, 5s, 4s, 3s. Good. The sectors here, minor sectors, -6. These sectors are moving downward. Oil and gas, jets, XT, XLE, IGV. These are all moving downward, but we're getting more strength than we are weakness. Does that make sense, guys? And the sectors don't all move together. So you have to understand that some sectors will move higher, some sectors will move lower. Generally, it's a good view to look at this and say, if we've got a lot of longs and we're in 5, 6s, and 7s up here, really 4, 5, 6, and 7, and moving higher than with greens here in the shift, then we're pretty much in an uptrend. And again, moving through the sectors here, we get 7, 6, 4s. We get some dark greens, which means we're getting some real expansion upward. Dark greens here moving upward. And again, getting a real solid move. You see here on the weakness, the downward side, couple of -1s, -3, -2. Nothing too big. Solid bullish. No new triggers this week. What you would be looking for is you'd be looking for things that are 1 or 2 or 3 or 4 weeks old that are close to their entry, possibly have not hit the target yet. So this trigger here on IXJ, this trigger here on REIT, maybe at 3%. This trigger here at 2.77% on XLP. This trigger here at 3.91, maybe on USRT. These are all, this one here, 1 week old, 2.94. These are all solid triggers. XLV. The reason being is because we're getting this momentum. We're getting this popping trending. You're getting solid thrusting patterns here. And all you want to do is come in here like this one, this XLV, 750 and 2.85. Very close to its entry price. Hasn't hit its targets. It's got a great little move considering we just watched the sectors move stronger. Remember, I'm going week by week, watching the sectors trend. And that's kind of what you want to do. Now, you can save these and do the same thing. All I did, just so you know, I dumped them into a file, a folder, and all I'm doing is going one by one, left and right, so you can see how we move forward. And then here we go to 823. Okay, now we're getting much stronger. Look at how strong this is. Green, green, green. 33 thrust triggers here in blue. Dark greens are the pop shift triggers. Green, shifting, everything is green, except for these two. Everything is green. Good, solid rally phase. Okay, we are in a rally mode. 823, we're getting very solid, looking at a rally, and come back over here, and 823 should be right in this area. So remember, we were rally, rally, rally all the way through. Now, granted, this is, end of the week or end of data, but you can see how we moved. We shifted from this deeper red color pullback into a darker red where we saw weakness, into early strength, which is where we get a lot of our new triggers, into a strengthening week with no triggers, but look at the profits start to click in. Then we get into a week where we're getting a couple of new triggers, but profits have really solidified. And now remember, look at where the flats have come in. So we had all of those flats right here, right? Flat, 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 flat on the 27th. Then look over here. We get very few flat trades. And look over here. We get only one flat trade. What's happening is, generally, guys, the new triggers are sticking. It's trending upward, and we're getting follow through, which means we don't see a lot of flat triggers. And then we come over here, we got one flat, everything else is trending. We come over here, we get no flats, couple of new triggers, everything is trending upward very solidly. We come over here, we get no flats, couple of new triggers, everything's trending solidly, except look at all these reds. Uh-oh, markets are shifting again, starting to pull back. We're losing our broad sector momentum. And we're getting a couple of red pop shifts here. And we're getting a green pop shift here and a red pop shift here. Miners coming down. Then we go to the next one. Boom. Red, 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 red. Start to get into flat triggers. We get into the 33 thrust to the downside. Lots of red. Lots of red. Everything is red. What this is telling you is the market is shifting downward. This could be a big, broad correction. This could be a moderate pullback. But this is telling you this is when you want to start to look for protecting open positions. Okay? That's what this is generally telling you. The momentum is shifting to the downward side in some sectors very strongly. -7, -6, -8, -5, -8. These are big, strong downward trends. Then we come back the next week, 9/15, and what happens is we get almost an immediate reversal. We're still greens, couple of flat trades here. And remember, these flat trades, gold miners, GDX, and XLI. GDX was where on our list? Looking for it. Right down here. Long trade with -4.97, 2 weeks old. XLI is looking for it. Right here. Long trade -2.83, 1 week old. So remember, these are trades that didn't really hold up, and they have minor losses, 2%, 2.5%, 1.5%. That's how this is designed to work. The trades that work stick, and they typically turn into great returns. The trades that don't work are out with 1.5%, 2.5%, maybe 3%, depends on volatility. So again, controlling your allocation based on the type of trending you're seeing, particularly in these sectors, and whether they are a 33 thrust or a pop shift trigger, can be fairly important. And then lastly, we'll go to this next one. Bunch of new triggers again. GDX got back in its trade here. And this is just rolling through this bottom. This is back in 921, about a month and a half ago. Big 33 thrust, upward trending, new triggers. We want to see it stick and hold. Lots of green triggers, lots of green thrusting. So we're getting good solid follow through, and then the following week we get minor consolidation, and the only flat trigger we get is this real estate fund here. So you can see how these color codes and what you're actually looking for. And again, by the time you hit target 1 and target 2, you've protected all the profit in the trade. You really have. So, and that's the last one we have here. But if we come back over real quickly to the current list, you can see as of last week, slight downward shift moving into the election. This is actually very timely. This is telling us we're moving into a correction. We have no new flat triggers, and we have a solid pullback taking place in the market. So ideally, what you want to try to do is use my judgment, use my understanding of the market and what's coming to try to come in and find the best trade setups over here. It's not that hard to figure out. You basically want to look at the ranking, how much it shifted, how long it's been in the trade, whether or not we're close to our entry price or not, what your win-loss ratio is, and your profit factor. This is decent. 1.0 and 2.45 is decent. 0.8 and 1.9 is decent. If you get a win rate up above 1.5 and a profit factor up above, call it, 0.7, 0.8, you're good. That's a good number. So 2.42 and 97, it's a good number. 1.97 and 95, that's a good number. 2.90 and 1.3, it's a better number. 6.5 and 2.0, that's a great number. 8.25 and 3.1, really great number. 1.3 and 7.1, not so good. 1.0 and 5.6, really not good at all. And here we go with my server again. So you can see kind of how I would look at this and how to trade. 1.2 and 5.0, not so good. I wouldn't really trade this. And if I did, I'd trade with maybe 20 or 30%, nothing too serious. 1.2 and 49, maybe 20, 30%. 2.6 and 1.3, okay, 50, 60, 70%. 1.3 and 71, 20%, 25%. 2.0 and 92, 50, 60, 70%. 1.47 and 71, maybe 20, 30%. 2.0 and 85, maybe 50, 60%. 3.2 and 1.25, 6.5, 2.0, these would be solid. These would be 50, 60, 70%, maybe even more allocation. So you get the idea, right? Hopefully this video helps. Again, it's a matter of learning from experience, but when you use the TT scanner and you combine it with the expert growth, which are right here. Nope, right here. When you combine it with the let me correct this, the gunslinger tools, you can do very, very well. It's just a matter of learning what's taking place in the market and what you're looking for. Okay, so again, there we go, refreshing the data. It's just a matter of learning, guys. And remember, you come back over here, you use the gunslinger tools when you're using these signals, and I think the clarity is going to come in very solidly. If you have more questions, I'll try to work with you on them. But remember, this is all about helping you find better trades. And now remember, the markets rotate. Look, this is gold, but look, up, down, 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 up, down. Where do you think it's going? I'll tell you, long term, I believe this sucker's going straight up. Okay? I really do believe it's going straight up. And I believe gold wants to accumulate ahead of the risks of the global markets moving, global central banks printing and addressing more money. Remember, gold rallies, gold moves as a hedge against global risk. Global central banks have been printing money for the last 15, 20 years, but really have been printing money for the last 10 years since COVID, hand over fist. And that's why I think gold is going to start to really rally, is because gold is hedging global market risk, derivative risk, market collapse risk, and it's going to start pricing in a $600, $700, $800 trillion risk compared to pricing in a $200 to $300 trillion risk. That means that gold will probably move up 300-400% over the next 6 or 7 years. But again, use the tools. It's about trying to help you. These triggers are very solid. They really are very solid. It's a matter of learning how to control them with the profit factor, the win rate, and learning how to catch these trades efficiently. Remember, when you get into something like a new trade here, GDX, gold miners minus 0.28, come over here and take a look. 1.91, 86, 0.86. Guess what, folks? You're looking at about a 40 or 50% allocation here, especially being just below the entry. Here, new trigger, just below the entry, 7.8, 1.67, about the same, 50, 60% allocation level. Have a trade down here that's IYC 3.2. It's already in the trade by 1 week, 2.1 and 4.63. Much better win-loss ratio and profit factor. This is something you could start chasing with 60, 70, 80% of allocation because you got the solid win-loss ratio and profit factor. Okay, guys, little long, I know, but I hope it helps. Talk to you later.